So you've got this killer idea for a business, but how do you convince an investor that it's actually more than just a dream? Well, the answer isn't just a great pitch. It's a great story, but one told with numbers. Today, we're going to break down exactly how to build a financial projection that gets you funded. And this right here is the million-dollar question for every single founder. How do you actually bridge that gap between a cool concept in your head and a real company that can thrive out in the world? It really just comes down to one crucial thing. The difference? It's a story, but not just any story, a financial one. It's a narrative backed by cold, hard numbers that convinces people your idea isn't just clever, it's profitable. And that story is your financial projection. Okay, so think of your financial projection, for the next 3 to 5 years as the actual script for your business's future. It's the tool you use to translate your vision into a concrete, measurable plan. It shows investors you thought through not just the what, but the how you'll grow, how you'll scale, and probably most importantly, how you'll make them a return. All right, so where do we even begin building this story? Well, it all starts with assumptions. Now, I know assumption can sound a lot like pure guesswork, but in business, these are your foundational, educated guesses. They're basically the rules of the world you're about to build with your numbers. Let's bring this down to earth with a little example. Meet our fictional startup, Artisan Bots, a company that makes custom 3D printed miniatures. Now look closely. Every assumption here has a why behind it, a rationale. That 15% market growth? It's not a random guess. It's based on actual industry reports. The customer acquisition rate? That came from some early marketing tests. This logical backbone is what makes your financial story believable. Okay, let's zoom in on one of those key assumptions, the customer acquisition rate. This number is literally the engine of your growth. It answers the simple question, how fast are we going to get new customers? And it directly feeds into your revenue projections. So yeah, getting this one right is absolutely crucial. Okay, so our foundation is set. We've got our assumptions. Now we get to the main plot of our financial story. This is where all the action happens. It's that classic conflict, what you earn versus what you spend. Let's see how this actually plays out for our company, Artisan Bots. First up, the fun part, revenue. We're projecting some serious growth here, from $25,000 in year 1 all the way to $87,500 in year 3. And you'll notice that huge 100% jump in year 2. That's an aggressive move, but maybe that's when we find our product market fit. Then it levels out to a more moderate 75% growth. This is the optimistic part of our story. But every good story needs some conflict, right? In business, that conflict is your costs. We've got COGS, that's the cost of goods sold, basically what it takes to make each bot, and that's tied directly to our 40% assumption, so it scales up right alongside revenue. Then you've got operating expenses, which grow a little slower. The tension in our story is crystal clear. Can our growth outrun our costs? And this chart? It shows that conflict perfectly for year 3. You can see the revenue bar sitting pretty at $87,500, while total expenses are down at $65,000. And that gap right there between them, that's the whole point. That's our potential profit. That's the happy ending we're shooting for. And that, of course, brings us to the climax of our story. We've set the stage with revenue and costs. Now it's time for the big reveal. Does our hero, Artisan Bots, actually win? I mean, does it become profitable? And here it is, the big reveal. The P&L summary tells the entire story in just a few lines. Look at year 1, a loss of $5,000. Totally normal for a startup. But then you see the turning point. In year 2, bam, we hit profitability with a $5,000 net profit. And by year 3, that profit has ballooned to $22,500, giving us a really healthy 25.7% profit margin. The story here is simple. The business model works. So, great. Our story has a happy ending. We're profitable. But hold on, that's not the whole picture. A profitable company can still go under if it runs out of cash. That's where cash flow comes in. Think of it as the oxygen for your business. Profit is just a number on a spreadsheet. Cash is what you use to pay the bills and keep the lights on. Now, if you want to dig a little deeper into the story, you use financial ratios. Gross margin tells us how efficiently Artisan Bots makes each miniature. On the other hand, net profit margin shows us what's left after all the expenses are paid. An investor is going to look at both of these to understand not just if you're profitable, but how you're profitable. Okay, our story is written, it's solid. Now for the final act. You've got to present it to an investor. And this part, This is like facing the dragon. They are going to scrutinize every single number and every assumption. So, how do you prepare for their toughest questions? You can bet one of the first questions an investor is going to ask is, so, when do you actually stop losing money? The answer is your break-even point. This analysis tells you exactly how many artisan bots you need to sell just to cover all your costs. It's not about profit yet, it's purely about survival. Showing you know this number proves you get the fundamental economics of your own business. Next up, they're going to hit you with the what if questions. What if your numbers are wrong? This is where you show them you've already thought about that. What if sales are 20% higher than you thought? That's your best case. What if your material costs suddenly jump 30%? That's your worst case. Having a plan for each scenario proves you're not just some wide-eyed optimist, you're a prepared realist. And finally, we get to the part every investor is really waiting for, the reward. By pushing our projections out to 5 years, we can calculate a potential return on investment, or ROI. For an early investor in our little company, Artisan Bots, it could look something like this. This number is the ultimate payoff. It shows that taking a risk on your story could lead to a massive win for them. So let's just bring this all together. We started with a simple idea. We built a world of logical assumptions. We mapped out our revenue and our costs. We found that profitable climax, and we got ready for the tough questions. We've built a complete financial narrative from the ground up. And really, this is the most important thing to remember. This whole thing isn't just an exercise in crunching numbers. Your financial projection is the most concise and powerful version of your business plan. It tells a story of viability, of sustainability, and of incredible potential, all in the one language everyone understands: money. So, as you go off and build your own financial story, this is the one question you have to keep asking yourself. Because, look, a great idea is a start, but a great story, backed by solid numbers, now that's an investable business.